So our next panel is about a different kind of river, the river of new investment in clean technology. We'll meet two leading clean technology investors who will analyze how smart money from the US and China is going green. Our panel will be a conversation with Christopher Huang and Priscilla Liu with Fortune Global Sustainability Co-Chair Jeffrey Ball. But first, we have some insights from our partner Refinitiv on investing in sustainability. Let's take a look.
Good afternoon. Thank you for being here. We have a really interesting conversation ahead of us. We are going to talk about what really matters in terms of talking, which is how money talks. Clay mentioned earlier that we gave a lot of thought to the title of this conference and came up with Green Grows Up. And that's because of a couple of things. One is because the size of the players involved in this is increasing. Another is because the amount of money that's being invested in this is increasing, which is what we'll talk about. But before we launch into that, I want to give us a reality check here and a sound check. A reality check here, which is that we're going to talk about the sums going into these technologies increasing, but let's all remember what also is increasing, and that is global carbon emissions are also increasing. So against the backdrop of a lot of euphoria about investment in these technologies, let's understand that these technologies are not yet beginning to crack, not beginning to move the needle in terms of what scientists say is necessary. And I think we ought to keep that in mind in this whole conversation. So we have Chris Huang and Priscilla, and what's interesting about Chris and Priscilla is that each of them is approaching this money flow from a different perspective. Chris is doing a lot of work in outbound Chinese investment, that is Chinese companies investing Chinese companies investing outside of China. And Priscilla is doing a lot of work in funds in which Western corporates are investing in China. Different game, but games that raise very similar issues. So what I want to do, Chris, is start with you. And you've been doing this for enough years that you've seen an evolution in this landscape. You started doing deals when some of the first, for instance, renewable energy companies in China were IPOing. And then you started watching and helping those companies and getting paid to help those companies go abroad, that is, make mergers and acquisitions abroad. And now, Fucheng Yu and Clay talked about this, the geopolitical challenge earlier. Now you're seeing a pullback in the extent to which those Chinese companies are going abroad, in part because of geopolitics. So talk for a minute about that change over the years.
Yeah, thanks, Jeff. And thank you for Fortune to invite me to come on the stage and share my thoughts. So, clean tech, sustainability, renewables is clearly a huge theme within China. China's going through its own energy transition, coal to gas, fossil fuels to renewables, continued exploitation of hydro and nuclear. And we've seen a significant amount of interest of companies both in the upstream manufacturing side as well as the downstream infrastructure side, investing not just within the Chinese market to satisfy what is the world's largest energy market, but also to go overseas to acquire new technology and just globalize their businesses. And as you point out, I'd say there was a very substantial outbound flows, say 2014, 15, 16, 17. Recently, it's cooled, partly because of the capital controls that were implemented at the end of 2016, 2017, and the caution ahead of the National People's Congress, but also what we're seeing increasingly is more protectionism in certain markets, especially in the Western world. So Australia, Europe, North America. It's getting harder to do deals within these segments because although these are clean tech, new industries, they're also very strategic. And at the same time, we're also seeing that Chinese companies are also becoming a little bit more cautious because if they're going to go through and marshal resources to bid for a project overseas or develop a project overseas, if there's a risk that that project fails because of external approvals that they can't secure or they can't get financing offshore, then the CEOs and the chairmen are being a bit more cautious, not wanting to take the risk of deal failure.
Because you don't want to lose.
Yes.
Yeah, okay. We'll come back to talk about a couple of deals in a moment. But Priscilla, you are facilitating Western corporate investment in funds, including, to a large extent, renewable energy projects. That is, funds in which Western corporates are investing in renewable energy projects in China. And my sense from talking with you is that your sense is that flow is increasing. The interest on the part of Western corporates in investing in these projects in China is increasing. Why?
Well, I think that we're talking about corporations that have a huge presence in China in terms of China as a market, as well as China being a manufacturer for these corporations. And China being really going and continues to be the largest market and opportunity, it's critically important to actually build up a goodwill. And to a large extent, different corporations come from different viewpoints as to why they're motivated to look into the investments into China in the renewable energy space in particular. Part of it is greening supply chain to offset carbon footprint from the manufacturing and the manufacturing production that, of the fossil fuel energy that is used. And others are looking at it more from the viewpoint that because so much of their revenue and profit is being generated and is growing in China in terms of their market, they're looking at really being able to express their sense of responsibility and how they believe that they want to really do good for the community.
So is this PR, or is this an increasing realization that market regulators from the Task Force on Climate-Related Disclosure in Europe to the Chinese security regulator in China are starting to impose teeth that are going to require these companies to tell the world how dirty they are if they don't clean themselves up?
Well, I think that because China is enforcing by 2020 for the listed companies to disclose ESG, and also for Hong Kong Stock Exchange as well, many of the companies in the manufacturing sectors who has presence in China and have listings in China, even though they're non-PRC, but they have joint ventures and also listed codes in China, really have to abide by the disclosure. So that is creating an awareness of how those numbers actually look like in terms of energy consumption, in terms of fossil fuel energy versus renewable. And some of it is as the trend goes towards disclosure, it won't just be the Chinese stock market or Hong Kong Stock Exchange, but I think more and more the trend will trend towards disclosure for all the other major stock exchange markets as well. And that is coming, and with a longer view of what is to be anticipated, I think many of the corporations and institutions are looking at how to really become more aware, more responsible in terms of how they are impacting the environment.
So I just to the audience, I think this is actually a really important point, and that is we've talked about green grows up and what's changing here, and Priscilla's isolated two things that are changing here. One is that this is not just advertising. This is a response to regulatory edict, increasingly, and an anticipation that if companies don't do something, they're going to get, as we would say in the United States, whacked. And the other is that China, in many of these ways, is leading the way, particularly in terms of disclosure. So let's go deeper. And Chris, let's just start with you. And I want to ask you about two deals. One deal is sort of a tale of a happy deal, and one is a tale of a not so happy deal that brings us into kind of the meat of what we're talking about. So correct me wrong if I have my facts wrong, but in 2016, Morgan Stanley and you personally helped facilitate an M&A deal in which a company based in China called Beijing Enterprises paid about €1.5 billion euros for a German company called Energy from Waste. This is a German company that has technology to convert garbage to energy. And the notion is that, the Chinese company, Beijing Enterprises, would bring that technology back to China, deploy it, get the know-how, and scale it up. That was a happy deal. 2 years later, there was a deal in which a company that most of you in this room will have heard of called State Grid, which happens to be the biggest utility in the world, tried to pay 1 billion euros for a 20% stake in a major German electricity grid operator called 50 Hertz. And we won't go into the details, but suffice it to say that the German government publicly came out and said that it was concerned about that attempt at a Chinese acquisition into the German electricity grid, and through a series of events blocked that deal. So unpack that for us. Why did one work and why did one not work? And what should we take from that about the broader reality of deal flow?
Yeah, so both deals you cited are in the German context. Germany is leading the world in terms of the Energiewende, the energy transition. Naturally, Chinese companies are very interested in what's happening there, State Grid in the 50 Hertz example. And also on the environmental protection standpoint, because China is moving from a landfill-based waste treatment model to a waste incineration model with urbanization and increasing population and higher and better use of land. There's also a strong motivation for the Chinese players to also look at what's happened in Europe in terms of waste treatment best practices, energy from waste, process know-how, technology, management capability, and that really drove the motivation behind Beijing Enterprises' acquisition of EEW. So Morgan Stanley was involved in these transactions, and I would say part of it was the time spectrum. So the EEW transaction was done in 2016, right. Early 2016. The State Grid 50 Hertz transaction was attempted about a year later. And at the same time, the asset class is quite different. Energy from waste, it's basically wholesale infrastructure. It's not dealing with retail end users. It's generally something that, it's infrastructure, how strategic it is, there's a question mark.
But it's not seen as anything, it's not seen as the crown jewels to the extent that the electricity grid is.
No, previously it was a business that was owned by E.ON,
yep.
And they sold it to private
German
equity,
utility.
to
Yep.
EQT, and then EQT ran an auction to sell the asset. Whereas 50 Hertz is the second largest high voltage transmission operator in Germany, and it's a strategic backbone network. And I think ultimately, there was some mixed views in terms of whether this asset should be held by foreign Chinese state-owned enterprises.
Okay, so if we have time, we're going to come back to talk about the implications of that. But I just really quickly, before we go to Priscilla, want to ask you one thing. You were very artful in describing the change in the time element. Why should we be cognizant of the change in that time element? What happened in the year 2016 that was relevant to the change in the view toward international investment?
Yeah, it's hard to exactly say. What I would say is that the corridor between China and Germany has been very open and very active in terms of M&A, and there's been a lot of very successful cross-border investments both ways. I think that over the years there was a cumulative success of Chinese companies investing across many different sectors in Germany, including Medea KUKA, which is a robotics company, also considered, kind of strategic, right?
So I will tell you that for the story that's unfortunate about electric cars, I happen to go to a number of electric factories, and they all have KUKA robots, right? Which is now owned or a large stake by a Chinese company.
It's owned by a Chinese company. So my point is, I think there's just at some point in time, there may be a different view internally, domestically, with respect to the acceptance of foreign capital, especially coming from China.
Let me be more direct. Is this basically the accumulation of trade tension upon trade tension, and combined with a sense that the electricity grid is wholly different from a waste to energy system, and therefore the decision was no?
I could say there could be some relation between these.
Got it.
These
Okay,
deals. Yeah.
Priscilla, to you. Thank you. Let's talk about one of these funds that you've done, which is a fund that Apple, a company. Who here has heard of Apple? You're all asleep. Who's heard of Apple? You've heard of Apple. You have Apple products in your pockets. Apple announced publicly that Apple was investing $300 million a year ago in a fund that Priscilla's company, DWS, formerly Deutsche Bank Asset Management, was facilitating. And this is a fund in which Apple is investing in renewable energy projects across China. So I guess what I wonder is this Apple's attempt to tell the world that it's green and sell more iPhones as a result of being perceived as green? Or does Apple feel like Apple's going to make money on these renewable energy projects? Or does Apple think that it's going to get regulated by the Chinese government on its carbon footprint from its Chinese manufacturing operations or its suppliers' manufacturing operations, and therefore it needs to get ahead of that curve?
I think it's probably all of the above, but I think, as we all know, the U.S. Large corporations, and of course Apple is no different, has been very much focused on declaring that they're green, meaning that they're responsible and they are really using renewable energy to offset any fossil fuel energy that's being consumed. And to that end, this fund was created, which consists of the suppliers in Apple's manufacturing plants, suppliers in China. And the positive side of this is that it really creates an accountability from the suppliers, because on a per kilowatt hour of fossil fuel energy, so if they all are using renewable energy, they don't need to count those kilowatt hours. But fossil fuel energy that is not, that is from fossil fuel, on a per kilowatt hour, each of the manufacturers would then invest in renewable energy.
This offsets their carbon footprint.
Right, exactly. And it has the positive impact that such kind of awareness and accountability creates really a vigilance in the energy consumption by the manufacturers, because it's become very visible as to how much power is being consumed for the production and the manufacturing that's being done. But it is, to a large extent, greening the supply chain. But it certainly does address if Apple is then asked as to what they're doing with respect to offsetting the carbon footprint that is being created from the manufacturing, this is the answer to that question and being able to address that issue.
And do you happen to know offhand roughly what percentage of the emissions attributable to Apple from its Chinese operations are offset in this $300 million renewable energy fund?
No, I can't comment.
Is it relatively, you can't comment?
Right.
Okay. Can you tell us if it's relatively large or relatively small as a percentage of the total footprint?
I can't comment on that either. Okay. So, okay. But I can say that this is really going in the right direction and addressing what is, I think, really critically important is having the accountability and the accounting, if you will, that actually tracks how much is actually fossil fuel and how much you can offset with the renewable energy.
Can you tell us a little bit about what's next in terms of funds? Presumably this is not the only one. What's next in terms of Western corporates other than Apple, or what is next in terms of technologies other than renewable energy, solar and wind?
So I think that the renewable energy is moving in a direction, and I use this as an example because everybody can relate to it, is that there's lots of REITs out there, REITs, that people are quite comfortable with, which is investment in real estate, hard assets. And renewable energy is moving in a direction where it is stabilized and has predictable returns, where you are able to aggregate the renewable energy assets and be able to then use it as an investment vehicle for not just corporations who are interested in offsetting the carbon footprint, but really getting a return on the investment on a steady basis. Different than some of the asset-based securities that was built before based on renewables, where people were using the funds that are being raised to do new construction. If you look at more stable, connected renewable energy assets, that's really where you can begin to look at a more steady return on the investment capital. So today we're addressing renewables, but I think going forward, one would be looking at infrastructure systems that would do recycling, that could do waste to energy, and all of these are plants, if you will.
Factories.
That could be assets that once it matures and gives a steady return, could then be aggregated as an investment vehicle for not just people who have an interest in doing any offsets, but really as an investment for return on the investments.
Is Tom Werner in the room? Tom, could someone get a microphone over here, please? We'll come in just a second while you're doing that. So let me just ask you guys really quickly, what is the technology in the broad spectrum of clean technologies that you are most excited about putting your investors money into and making fees off merger and acquisition deals from? One technology you have to name.
Well, I think that an area that is being heavily discussed is storage.
Energy storage, batteries,
right,
that sort of thing.
Energy storage. China has not used much storage thus far because much of the energy produced is actually consumed by the grid, thanks to the upgrade of the grid so that the grid can actually throttle and be able to redirect and use with our ultra-high voltage interconnects that they have. But as more and more renewables are being generated and the need to actually have it be more mainstream as the base load for energy to be supplied, I think that batteries will very much take a more central stage in terms of the investments.
And as an M&A target, the battery industry or energy storage more broadly?
No, I agree with Priscilla. Energy storage, ESS, is a huge theme, especially given China's position as the world's largest EV battery user, right, in terms of EV manufacturing.
EV being electric vehicles,
Electric
cars.
vehicle, yeah.
Right?
The other area is offshore wind. Certainly, China already has the world's largest offshore wind market, but it's mostly domestic invested. The true offshore projects that have long track record, great management capability, et cetera, are found in Northern Europe, the North Sea, and we've seen a number of Chinese players as well as Asian players broadly, Japanese players, invest in de-risked operational offshore wind to learn, to get expertise, management skills, and know-how to potentially invest more and harness the significant offshore opportunity here in China, but also throughout the rest of Asia. There's Taiwan, there's Korea, there's India, there's Vietnam, there are other regions, Japan. Not all those markets will be open to Chinese investment, but certainly there's a lot of opportunity here.
Okay, excellent. So Tom, thank you for waiting. So this is Tom Werner, the Chief Executive of SunPower, one of the world's large solar panel manufacturers and solar developers based in California. Thanks for flying the long distance. Tom, the reason I'm calling on you is because you have a relationship with a Chinese company based in Tianjin, near Beijing, and I just want you to comment for a second on what the rationale for that investment is and the extent to which some of these geopolitical tensions that we've talked about up here have been a material problem or not in that relationship.
Well, so it does build off of some of what you've talked about. Maybe 10 years ago, we were doing solar cells, we were doing the module and development, and we had been an early pioneer with a way to cut a wafer, diamond wire. And rather than...
Wafer's a component of a solar panel.
Yeah,
right.
So to cut a silicon wafer that you would then turn into a cell. And we thought, well, we can't vertically integrate on everything. We need to find a partner. And we found a partner in Tianjin, TZS. And that was maybe 8 or 10 years ago, and that worked great. We had a couple other things we did downstream, actually, with some of the multinational companies from America that had a supply chain in China where we developed projects with TZS. And since then, we've moved solar cell technology to TZS, or we've joint ventured where we actually put some equity in and they've expanded and made the production 2 gigawatts. Lastly, I would say in terms of the geopolitics, I would say the tariff situation, this topic came up in America, so yes, it's relevant.
Okay, we have 1.5 minutes and you each get 25 seconds, and I'm going to cut you off after 25 seconds. And the question is, you can tell policymakers one thing to facilitate deal flow in your world. Who do you tell and what do you tell him or her, Chris?
Well, I think there's a tremendous investment inbound into China renewables, but you don't have many multinationals or international investors investing, largely because there are still some issues with respect to subsidy collection, grid curtailment, kind of policies, sustainability of policies.
That is to say, whether the Chinese government will be sustainable, will continue the policies that it has articulated.
Yes. So I think if those are clear, they're permanent, and they're here to stay, then I think there is also a role for foreign capital to help fund what is the world's largest renewable energy
so
market.
Policy consistency by the Chinese government with regard to renewable energy. Priscilla, 25 seconds.
I believe that we're already approaching where, in the case of solar in particular, subsidies are no longer there in order to give the kind of return that's attractive or reasonable. And wind is very much moving in the same direction. In fact, the new constructions that are being invested actually do not have subsidies. And you can still make a case in terms of the investment. So I think that China continues at its 6 trillion watt hours of consumption growing at 1 or 2% per year, which is twice as much energy as US, continues to grow in terms of its energy demand. It is a tremendous opportunity to actually invest and be able to get the kind of return on investment for investors. And then I think that because of the success that China has had in this space in such a short period of time, there's a lot that can be learned from other developing countries in terms of how this can be done successfully.
Okay, so watch this space. Thank you both very much. Thanks for your attention.